everybody, welcome back. It is Kevin of Small Cap Voice, and the last time I was here, we talked about how music royalties work and how companies like Music Licensing Incorporated, that's OTC Markets SONG, use those royalties to capitalize. Well, today we're going to go a lot deeper, and trust me, you're going to want to stick around for this one. Because while music royalties may seem like such a niche investment, it's actually an asset class that investors are starting to take some serious attention to. So let's break that all down. First, let's talk about why music royalties are a really great investment vehicle. See, unlike a stock, which can be dependent on things like the headlines or what a CEO sends out on X, or real estate, which requires a lot of maintenance and upkeep, music royalties operate on their own. It is passive, consistent income for the holder. They produce reliable revenue year after year. And I mean consistent passive income every time a song gets played, whether that's on Spotify, Apple Music, or that coffee shop that you go to every single morning, someone is generating money there. And that's why companies like Music Licensing Incorporated are so focused on acquiring the rights to these assets so they can do the same. And here's the thing, music royalties don't just survive economic downturns. They often thrive during them. See, no matter what's happening in the world, people are still listening to music. Whether the stock market is going up or down, whether the real estate market is booming or busting, people are still going to stream their favorite artists. That makes music royalties a low correlation asset, meaning that they don't move lockstep with typical investments like stocks or bonds, which makes them a powerful tool for diversification of a portfolio. So let's talk numbers for a second. Well, historically, music royalties have shown an annualized return of between 10 to 12%. Which is admittedly higher than most traditional investment options. Some reports even suggest that certain royalty portfolios outperform the stock market by far in the long run. Plus, as streaming continues to dominate how people are consuming their music, these numbers are only going to increase. More plays means more money, and the companies and people who hold those rights are going to be the ones profiting. So how does a company like Music Licensing Incorporated capitalize on something like this? Well, they've built a business model around acquiring the performance rights from these artists instead of making the music directly. They invest in the ownership of existing songs that are already generating revenues. That means they don't have to gamble on hits. They simply buy into the music that's already proving its worth into the market. But it doesn't stop there. See, companies in this field often focus on diversification by acquiring the royalties across multiple genres, time periods, and even types of usage. They're not just buying the pop songs of today's biggest artists. I mean, they do that too, but they're securing the rights to music that has the potential for steady plays in the future as well. This way they reduce their risk while also increasing potential revenue streams. Another key advantage of this type of asset class is active management. See, a lot of people think that once you're in this business, you just sit back and collect checks. But companies like Music Licensing Incorporated often take a more strategic approach. They work to maximize the value of their investments, often by negotiating better rates or placing the song in lucrative media opportunities, essentially ensuring that every possible way of revenue collection has been made. That's what separates a passive collector in this business from an active investor. Now, if you're wondering why investors should care about this market, I'll give you 3 reasons. Music royalties offer diversification, passive income, and growth potential. For diversification, they're independent of stock market fluctuations, so it's a great way to balance out the risk of a portfolio. Unlike real estate, which requires often a lot of maintenance, and stocks, which require consistent monitoring, music royalties are a pretty consistent source of passive income without much necessary involvement from the holder. Obviously, they can take a more active role if they choose to. And as far as growth potential is concerned, just look at how the industry is booming. Streaming is at an all-time high with billions of hits every single day, and more content is being created than ever. Case in point. There's an increasing demand in music from everything from social media to blockbuster films. And at the end of the day, companies like Music Licensing Incorporated are taking advantage of an asset class that's been flying under the radar for a very long time. While traditional investments can be volatile, music royalties offer something a little bit different: consistency, scalability, and long-term value. And as the demand for music grows, that value grows in this space as well. So the next time you hit play on one of your favorite songs, just remember that somewhere out there, someone's getting paid for it. And with companies like Music Licensing Incorporated, investors now have a way to be part of that type of revenue stream. Pretty cool, right? Now do your own due diligence and drop your comments down here below. Thanks for tuning in, and if you found this interesting, hit that subscribe button and definitely hit that like too. And check out Music Licensing Incorporated. That's OTC Markets SONG. Kevin for Small Cap Voice. See you next time.